What are the best way that you can start investing today if you're a complete beginner? Nowadays, with the all internet and just news in general, there's a million ways to invest. We see crypto, stocks, forex, equities, gold, silver, real estate, coins, Pokemon cards. I mean, literally watches, anything you can name. There is some form, some ways that you can invest and make money. People are even flipping cars. They flip about just everything. I mean, we see guys going to garage sales, making money, flipping it, and making a career out of that. So, what are some of the best way, or what are some of the best ways I think that you can start investing as a complete beginner if you do not know much? And I'm gonna be taking this from some risky ways to invest and some much less risk ways for invest and something in between. As always, it's not financial advice, but it is some. I do have some experience with this. Of course, I'm an investor myself, real estate, crypto, stocks, options, and many other different ways. So I think I can provide you a lot of value. So make sure you watch this whole video, especially for a beginner. No matter what you're investing in, there's always going to be three categories of investments. One is going to be light risk, something very safe, like for example, bonds, things like that are very, very passive, not really a lot of risks involved, and are kind of guaranteed. But as always, if there is low risk, there is usually very low reward, which means if you don't have a lot of money, it's usually not worth your time. But that is an important category to have. Then there's a medium risk, something like a SPY ETF, something like a company, Apple, Microsoft, all those blue chips companies, which they're going to do well long term, but they're still mildly risky because you don't know if there's going to be a crash, a black swan event we saw during COVID. All kinds of stuff could technically happen, which makes it a major risk. But again, now having major risk also means you have medium reward. It means if you have a decent bit of money, you can actually do quite well investing in these assets. And lastly, the fun one, of course, is going to be high-risk investments. This is going to be your cryptocurrencies, your forex, your gambling, that an investment, and your day trading, which could fall under gambling. Now, also picking certain stocks alone. For example, picking a penny stocks that you might have read on Reddit somewhere that can be the next big unicorn company. This is extremely risky because, this could have a high chance of failure. 90% of stocks listed on the NASDAQ and the S&P 500 tend to fail, which means the high likelihood you find the next unicorn, the next Apple, Amazon is very, very unlikely. Again, also with cryptocurrencies, they're extremely volatile. And this is going to be your third bucket. High risk, but also high reward. And having a mix of these three buckets is usually what a good business portfolio should be. Depending on your age, you kind of want to put a little more in each bucket. If you're younger, you can take a lot more risks for long-term plays, and if you're older, you do want to be on the safer side as you want to worry about the retirement and having money for that. So the way usually it's built, you would have a 40% into your medium risk, then you would have at about 30% in your low risk, and then you would have the rest in a high risk. And you can adjust it depending on one, your risk tolerance, how much money you have, and your age, but that will be roughly how it will be built. So let's first talk about what I'm mostly known for, what you know me for, which is investing in the stock market. The easy ways to invest in the stock market is investing in something called an ETF. An ETF, you can imagine, is a bucket full of the best companies in a certain sector or a mix of sector. The most famous one is going to be the S&P 500. The S&P 500 has the top 500 companies in the US and in the world, part of it. So, it's a good, solid companies that are making ton of money. Think about Microsoft, that's the biggest holding, Apple, Nvidia, Walmart, Caterpillar, Tesla, Meta. Those are all the companies that are included in the S&P 500. Now, the S&P 500 tends to return around 9% every single year if held for at least 10 years. So it's a pretty medium risk to low risk that brings medium to low risk rewards as well. So it's definitely the easiest way for a beginner to get involved. How do you get involved with this? Well, to afford any stock or any ETF, you have to get a brokerage. A brokerage is going to be depending on where you live, mostly by country. If you're in the US, something like Thinkorswim will work, Charles Schwab, M1 Finance, or even your local bank like JP Morgan can have some kind of investment opportunities for you, which I do tend to stay away from. I much prefer something that you has an easy app that you can come look and kind of look and manage your investment portfolio. If you're outside the country, you probably have to do a little bit of research with Google to see which one is the best way for you to build a long-term portfolio. With this medium risk in stocks, there's also other ways to make money, which is called dividends. Holding certain stocks, for example, Apple can pay you a certain amount of money every single quarter depending on how many shares you hold. Now, holding certain dividend company can bring you a monthly extra income that you can use in your low risk to medium risk portfolio. And lastly, to use stocks at your advantage, you can invest in some high risk companies. But let me make this clear. If you're going to spend hours of research the way I do, the way you might know me from, which is, hey, I learn the market, I study the market, I read what companies do, I have a much better knowledge than the average Joe on what companies might do well long term, stay away from picking singular stocks. Just pick or sticking to the ETFs such as S&P 500, the NASDAQ, the Dow Jones, because you're going to more than likely, there's probably a chance opportunity that you're going to fail at picking the right ones regardless.
The average person will not know enough to know which stocks to buy. They won't know enough to know when to buy them, but they don't have to, because if they can buy all of America through an index fund.
Regardless, so if you're going to be high risk on something like stocks, make sure you have one, the will to actually study and do your research, and two, have the time as well, because if you're too busy doing other things and not studying about this, you usually get burned anyway, and that from a high risk can just be you wasting your money. Next, let's talk about what's everybody hyped up on is cryptocurrencies. The safest way to invest in cryptocurrency today is investing in a Bitcoin ETF, which has recently launched and kind of pushed Bitcoin to new all-time highs as of late. That can be with something like a GBTC, which is Grayscale, which is the funder of one of the Bitcoin ETFs. For me personally, it is easier for the regular Joe because you don't have to worry about building a crypto wallet or downloading Coinbase or other apps, which is not too difficult, but it is much easier if you already have a stock portfolio and just buy some GBTC or any other Bitcoin ETFs that are out there right now. Now, if you're a little more advanced, I want to be more in the higher risk, you can always go ahead and download Coinbase or any other app that's, like Binance, depending where you live, and actually buy cryptocurrencies themselves. Now, I do put this a little more riskier than buying the ETF because we've seen a lot of times in the crypto space that brokerages do go down. We saw it happen with FTX, we saw it happen with Luna, Celsius, BlockFi. A lot of these companies, Mongox in the past, all these crypto companies are very loosely regulated and you might lose your coins. It's happened to me and it's happened to just about almost anybody that's been for any extended period of time in the crypto space. So this will be a little more advanced, but if you do, if you do want to download it, make sure you're buying Bitcoin is going to be your safest one. And if that's your blue chip coin, and then you have Ethereum, and then you have the altcoins. The altcoins are all going to be in very high risk. So you have the high risk bucket, which is all cryptocurrencies, and then very high risk is going to be the altcoins. Those are going to be your AVAX, Solana, any other altcoin that's not Bitcoin and Ethereum, as they're extremely volatile, can go pretty much back to zero, or they could also go up thousands of percent. Again, low, put not too much money because it's your very high risk bracket, but it could potentially see you a ton of money. I mean, we're seeing right now a complete craziness, whatever is going on with the altcoins, meme coins, whatever you call, people flipping $500 into $200,000. What is the likelihood of that happening? Very, very small, but it is happening in the crypto world. Now, let's talk about real estate. It's everybody's favorite darling. Everybody that wants to get investing, they always talk about real estate. And real estate is being almost romanticized, in my opinion, a little bit overhyped. People think that with very little money, they can make a ton of money in real estate, which is honestly not true. Real estate does require a good amount of capital, has some downsides, and a lot of margins are just not going to be that great. Now, there is a ton of ways to do real estate, but for a very beginner that doesn't have a ton of money, your best way would probably be house hacking. If you ever heard of house hacking, it means you buy a property or house, a duplex, wherever it is, you live in either one of the rooms or one of the sides if it's a duplex, and you rent out the other side. Now, the rent revenue should bring enough money to cover the mortgage, which kind of gets you a free house in a way and free rent for somewhere to sleep for free. As rather than spending money on renting somewhere, you have someone pay your mortgage. Now, you do have to live with somebody else. Preferably, you want it to be someone you know, a friend or a family member that you can kind of split costs with, which will be very helpful. And in long term, you get this free house, you stay there for a couple of years, and then you move on and do another house hack. Now, this is very powerful because your first house, you can apply for something that's called an FHA loan, first home buyer loan. This means that you can put very little money down. So a lot of people, what's stopping them from buying a house is the first down payment, because nowadays it's very hard to save unless you have a really high good income. It's hard to save a lot of money for your first down payment, because on top of the down payment, you think about taxes, bills, closing costs, and a lot of stuff. Especially if it's a house that's not fully updated, you might spend some money into renovation. So that's probably the best way I can say somebody that wants to stay in the medium to lower risk bracket be safe with, because housing, you're always going to need it, even if there's a downturn into real estate market, which is just not likelihood in the next few years. You're always going to be good, and at worst, guess what? You have a place to stay versus paying rent. Now, if you have more money, you can do something that's a medium to maybe slightly higher risk, which is something like called short-term rental. I own a lot of Airbnb recently, and the returns just happen to be much better. Now, Airbnb is not like Airbnb used to be 2 years ago, where you can find a property, rent it out, and then put in Airbnb. Nowadays, it's a lot harder, and the best way for you to Airbnb property is going to have to be by owning it. So that means you have to buy it, and since you cannot live in it because it's going to be an investment property, you will have to put at least 20% down on that property. So make sure you have that. And also make sure that the laws in your city, town, county, and state are okay with you doing Airbnb. You do everything by the book, because cities are cracking down on it. And if you're somebody that you think you can get Airbnb, make a quick buck, and get out without having too much work, it's just not the case anymore. Guests are wanting a really good experience, so they will really give a better review. And two, cities are cracking down on any illegal short-term rentals, especially if you're in a hot market. They wonder the money when you have to apply for the short-term permits. So make sure you're getting it. If you are not willing to go through all those fusses, then just keep a house hacking, get a property, live in it for a few years, refinance the property, and then make money when you're renting it, and then move on to the next property. That's a good long-term plan that you can have, which by the time you have a retirement, you could have a nice 6 to 10 home portfolio, if not more, if you do really well. We talked about stocks, crypto, real estate. Let's talk about one of the best investments that no one really talks about. This is a low-risk investment that has extremely high return. Only investment that I can promise you will give you the best returns. That is investing in yourself, investing in your health, investing in your mental health, and also investing in your education. There is something that about investing in yourself that nobody can ever take away. You can never lose if the market crashes. If you develop a skill, master a skill, get your body healthy, get yourself in shape, there is nothing but upside with extremely low downside. If you buy yourself a book, let's say it's $20, and you learn a thing or two that you can apply it to your actual real world skills forever, what is the downside for that? At worst, you get yourself a book, right? It was much better than you going out and buying yourself a couple drinks at the bar. Or imagine you spend a couple $100 to go to a really nice gym that makes you want to go every day, like a Lifetime Fitness or an Equinox. What's the worst thing that can happen? You cannot go out on Friday night with your friends because you have to save $200, but at least you get to go to the gym every single day and make your body healthier. You feel more confident. You can go to your next job interview feeling good about yourself in a nice outfit that fits you well and gets you a nice job. So one of the best things you can do at pretty much any point in your life is always going to be investing in yourself. Well, guys, I hope this video helped. I hope this gave you a guide on how to start investing as a complete beginner. And if you want me to jump into just one particular asset class and talk more about, for example, hey, until you give us a full portfolio, even though I already did, I'll remake a new one and tell you exactly what you could invest in when it comes to the stocks. So like, hey, Antonio, we really want to know about real estate. No, what are all the different ways that you invest in real estate and I can invest in real estate? Not just house hacking, Airbnb. Tell me more your multifamily properties, tax lien, tax deeds, fix and flips, and all the other things that you can do in real estate to make money. Don't worry, and I'll do that for you. Or cryptocurrencies, you're going to get really risky. I can use some cryptos that I think could have some upside in the long term, and some of the best ways to play during a bull market and a bear market in crypto. So let me know in the comments below what you want to see next, and I promise you guys I will make that for you. And as always, peace.